All right, everyone, we're going to get right back into the Chapter 14 homework assignment here with Chapter 14B's homework, which is our um, planning for next year's budget. And everything we do here is going to be under the assumption that you've all read through the book and understand the importance of creating a budget, and not just, hey, let's go make a budget, but a realistic budget that sets achievable and stretch goals within that, knowing that there are two real reasons we have a budget, and that's to try and help predict our revenue and kind of be able to forecast our expenses, but also provide those goals for our staff, managers, and all those responsible for our our sales and the overall financial well-being of our company. Set targets and goals for those to hit. We do this by setting up budget, the realistic budget based on our previous year's data, right? So if we look at this and we see that our food cost, and you're looking at it right now, our food cost percentage for the current year is 37.9%. Is it really feasible for us to then say our goal is 12%? And the answer would be no. I mean, we're set up to fail. The variance is going to be extremely drastic in that case, and it really serves no purpose. Thus, if you're the person that's in charge of the budget and you've got managers, supervisors under you, or if the owner is then saying to you as the executive chef or sous chef of a restaurant, hey, we need to get this to 12%, you're going to lose faith pretty quick and probably consider, even leaving that company because of the pressure to try to get your food costs down to 12% when that's just not possible. So again, using that historic data to set a realistic goal, right, and then understanding any of those internal, external factors that can impact the potential for us to make profit, control cost, and those goals of doing the same. So if you look at the spreadsheet that we have here, this is, again, Chapter 14B's homework, and this is setting, as you see right here, our next year's budget. So we're looking here, and we're looking at our current year, and we most likely are doing this if you run your year from January 1st to December the 31st. We're most likely setting the next year's budget sometime in October, November. So current year, again, doesn't mean we're doing this on December the 31st to turn around and do this on January the 1st. We're doing this with actual data that we've done in years past as well as this year, plus what we may have budgeted for the next 1, 2, or maybe even 3 months. So if you're if you're looking at this and seeing current year, what we're doing is taking what we've done so far this year and what we, again, have budgeted so far. So some actual, some budgeted still in this. So when we look at this current year, that's columns B and C. When we look at these two things here, the current year, we see that all of this information is set. We did this back in the first part of our comparative and common analysis sheet to understand budget versus actual. So when we look at this and we see that our food sales were 1.4 million, we see that that was 80.9% of our total. So $1.4 million in food sales accounted for 80.9% of our total sales. Okay, same goes with food or with beverage. We had $330,000 in beverage sales. That accounted for 19.1% of our total sales. Okay, well, as we're sitting here and we're going over this, our management or ourselves, as we send this out to others, has said our goals for budget next year are going to be to reach these numbers. Okay, so if you see any percentages or numbers, same dollar amount, an actual dollar amount, if you see that throughout here, that is our goal in preparing next year's budget. So what that says is, based on what we've done this year, next year we want to see our food sales be 78% of our total sales. In the current year, it was 80.9%. But next year, we want to see it be 78%. So again, a big gap here between food and beverage, but we want to close it just a little bit. We want to back this down about 2% and increase our beverage sales by about 2% of our overall sales is what we're seeing there. That will come with a growth of roughly 5% in total sales growth next year. So our year, $1,730,000 is our total sales in the current year. But we want to see that we have a goal, a budget to make 5% more year over year. So our next year's budget has to be 5% more in sales than this number here. So we'll start there, okay? Because we can't determine our food sales dollar amount, right? Because we don't have our totals yet. So we look at that. So next year we want to see a 5% growth, right? So we know, and I'll do this as typing in, we know that it has to be this number plus 5%. So think back to our spice factor, right? Think back to when we're adding, our spice factor to something. It's an increase in our total cost, right? So if our total sales were $1,730,000, we need to increase that by 5%, not get 5% of that number. So if we're increasing it, we should put a 1 in front. Times 1. 0.05 because 0.05 is 5%. So if we do that, we come out to $1,816,500. So now a 5% increase for next year's budget in total sales gives us $1,816,500. Okay, now we can figure these out. We can go ahead and fill these in. We know that we want this number to be 78%. We know we want this number to be 22%. That is our budget. So what do? Well, guess what? We're looking back at those, at our food cost percentage and all those triangles again, right? We know that we want our food sales, this box here, to be 78% of our total sales. Okay? 78% of this number. So if we do equals here, we'll take our total sales times 0.78 because that's 78%. Now we're getting 78% of that number. So we're budgeting for food sales to be $1,416,870. This number, our food sales, is 78% of our total sales. Okay, we'll do the same with this one. Equals this number times 0.22 because we want our beverage sales to be 22% of our total sales. $399,630. So when we look at this, we see that based on a growth of 5% in sales year to year, we expect to see a 78% food percentage of that and a 22% beverage sales percentage of our total sales. Okay? That's what we're looking at. We do the same things going across. I'm not going to fill all of this in for you. Okay? I'm going to let you do it yourself, but just remember to use the same categories here. Remember, food cost comes out of food sales, beverage cost comes out of beverage sales, total cost of goods sold comes out of total sales, and then all of our other information down here comes out of total sales. Okay? And when we get over here to our budget year, our next budget year that we're planning for, all of these numbers come out of this column. Okay? We don't go back to current year, we come to stay with this year. So this column works by itself, this column works by itself based on these goals. So we know, if looking at this, that our food cost percentage is going to be budgeted to be 35%, okay, of our food sales. This current year it was 37.9, so we're looking to kind of reduce that a little bit. Maybe we've got some more preferred pricing or something, but we've realized that, hey, If we can control this just a little bit better, we can increase our ratio. Okay, so if we said 35% here, beverage cost is anticipated to be 23%, we can do that, right? We already have this number. We already have this number. We just need to figure out the rest of it. We need this number to be 35% of this number. Easily done. This number times 0.35, because again, we're looking to get 35% of that number. Okay, so 35% of $1,416,870 in food sales is attributed directly to our food cost. Okay, so directly to our food cost. Remember, food cost comes out of our food sales, right? So with that, we should get $495,904.50. So as we see, if we increase our sales to reflect this and reduce our budgeted for cost to 35%, we actually reduce our overall cost. Okay, our overall food cost, and that's big. Okay, that's big. That's what we're going to do. That's a goal. That's that's something we want to work to achieve. We want to be able to control this cost down to 35% while also maintaining or increasing our sales. Okay, and you do the same thing going forward. Okay, just remember as we get down our total columns, remember prime cost is the cost of goods sold plus our labor cost. Income before fixed cost is going to be our sales minus prime cost and controllable expenses. We have total fixed cost, and we have profit before taxes. Now, we're not adding any taxes on this one, but like we did in class the other day, you would just stop right here. All right, so just looking at this, okay, 28%, obviously, this number is going to be 28%. Okay, 20% of salary and wages. So whenever we fill in our employee benefits, it's going to be 20% of this number here, okay? Same dollar amount, so if we're looking at music and entertainment, you got it. We want to spend exactly $18,000 again. We're budgeting $18,000 to go to music and entertainment, okay? Increase by 7% over last year, so that is going to take into account that we spent $53,000 last year, okay? And that equals the 53,000 times 1.07, because again, we're increasing it by 7%. So we put the 1 in front of our percentage, and we get 56,710. So when we look at that, we're budgeting to spend $56,710 in utilities in the next year. Okay, we're set here. It tells us exactly what we're going to do. General administrative, we need that number to be 40,000. We need this number to be 30,000. Okay, so as you see, some of these are written in whole dollars. Some are giving you percentages, right? Some say same dollar amount, right? So we know our interest next year is going to be the same. That's what we're budgeting. Oh, excuse me, 28,000. Budgeting for $28,000, same dollar amount. Okay, all of that is how you're going to continue to fill out this sheet. The keys to remember: food and beverage cost come out of food and beverage sales. Everything else comes out of total sales. Okay, increases is 1 and then the decimal form of your percentage to increase. Okay, and then anything that you have here for our budget goals, that's what we're going to do. We're budgeting that 28% of this is going to be that, okay, is going to be our salary and wages. So our salary and wages is going to be 28% times 0.28 of that number. So our salary and wages is what we're looking for in the budget year of next year. $508,620 is 28%, right? Our goal was 28%, so we set it at 28%. It's 28% of our total sales, okay? Hopefully we all got this. You can watch this video as many times as you need to. It'll be up for a while. You don't have to worry about it going away. But if you've got any questions, I strongly encourage you to reach out, as we only have a few, we have one class left and a few opportunities to meet. Good luck with everything. Have a good day.